Good evening, folks. Tim Davis here, coming to you guys with another weekly market review from my technical analysis point of view. Today is Sunday, July the 24th, 2022. The time is now 9 p.m. Going to jump straight to the S&P 500. So looking at the S&P 500, a couple things I will point out as we see this rally that we've been on in for the past couple weeks. So we've been in a nice little rally overall for those bulls out there. However, look at the totality of the circumstances, really did not turn back into a bullish market, only back up to an area of resistance. You see price action now hovering right around a 50-day moving average. You also see price action just coming back up to the top of a trend channel. So we've been in between this channel for the past several months. Been traveling in between this range for the past several months, and we're still stuck in that range. So now we're back up to the top of that range. And more than likely, the more likely scenario is that we will find a way to sputter out here and possibly head back down towards the bottom of the range. Now, there are several things lining up this week that could help send this back down to the bottom of the range, even maybe find a way to take out this low that was seen back in June. We have a slew of earnings. I mean, this is a big earnings week that's coming up this particular week. And just to glance at them real quick, I'm not going to look at each individual earnings report, but as we get to the middle of next week, we have a lot of tech earnings. Just on Wednesday alone, there's 92 companies to report before the bell, 143 after the bell. And then on Thursday, 144 before the bell, 114 after the bell. So next week we see it's going to be a big earnings week. Not only do we have a big earnings week, but we have the Fed meeting on next week as well on the 27th. So there's a lot of data that's going to be coming out next week dealing with these earnings as far as companies doing fine in the midst of everything that's going on, in the midst of a war that's still going on, in the midst of the coronavirus and now monkeypox and there's a lot of things going on. We still got supply chain issues. We still got inflation. So with all that, and we got Fed meetings next week, how will these companies fare during earnings? So we have to see how that pans out. But right now we are back at the top of a range. Looks like we could be heading towards the bottom of the range. And yes, we are still in a bear market. So one thing that price action did over the past several weeks is that anytime there's gaps in the market, 9 times out of 10, those gaps fill. So what the price action do? Each one of these gaps, when we had this big drop down, I mean, this is a sudden drop down in the last couple of days back in the middle of June. Each one of them, I mean, almost every day presented a gap area. So there was a gap there, there was a gap here, and there's a slight gap there. And ironically, the bulls fought back and filled every single gap. So price action now, we are back up to this area. We are back up to that area. So that means every single one of these gaps got filled. 9 times out of 10, after a gap fills, we normally find a way to trend lower. Okay, so after this gap fill, which is right here, look what happened. We trended lower. We got a little gap fill here. And not quite there, but right around here, and we trended lower just a little bit. But these two gaps, more than likely, have not seen a big reversal yet. So more than likely, we'll reverse to fill those two gaps back on the downside. So more than likely, again, after 9 times out of 10, after we see gaps down in the market, 9 times out of 10, those gaps fill. And that's what we saw during this run. Those gaps, all those gaps were filled during this run right here. So what can we see? What can we see now? Possibly a trend reversal. After the gaps fill, 9 times out of 10, we see a reversal of some sort. So we'll probably start to see price action reverse this will probably be the first target since this looks like a pivot point there. If I was to draw lines straight across here, that's a possible first target. And if for some reason we get a bounce here, but can't find a way to break back above this area of resistance, then we could see a little short bounce and maybe move back down again. And the next level will be possible to break this low that we've seen back in the middle of June. So that is the more than likely scenario heading into next week with so much economic data, with so much data coming out dealing with earnings and so much economic news to deal with when it comes to the Federal Reserve rate hike decision and the press conference. The press conference is going to be key as to how many more hikes will we see before the Fed starts to back off. And the Fed already continues to say that their ultimate goal is to bring inflation down. They're going to continue to hike until they feel as though that they met their ultimate target. So the more hikes we do, the more probability that markets won't like that. So we got to see what happens next week. But it could be the Fed could send the market on some jittery waters next week and some shaky grounds next week. So we got to see how it pans out. But that's the more than likely scenario. We are hovering around an area of resistance. So more than likely this resistance probably fail, and we could probably start to see markets trend lower. And if I was to just glance at the Dow Jones, we're going to see the same type of scenario. We also had these gaps here, and those gaps were also filled. And now we're starting to see, look at the full stochastics. You got this green line just hovering just over the red line like it's about to cross. That is a bearish signal. It looks like it's about to hinge lower. Look at the oscillator and the Williams percentage is starting to hinge lower. RSI like it's starting to hinge lower as well. So all bearish signals that are starting to pop up, which is signaling a possible market reversal back to the downside. NASDAQ is the one I really think is probably in it's going to be in some troubled waters, because I really think some of these NASDAQ stocks are going to really suffer. We've seen what happened with Snap. So I'm paying close attention to these tech stocks next week, because I think they're going to have some difficulties as far as being able to could have a slight earnings beat, but I can't see that if it's not a huge earnings beat, it's probably going to be a disappointing in the stock and in the stock move to the downside. So here's the NASDAQ. You see the Williams percentage already hinging lower, RSI hinging lower even further than the NASDAQ, and the full stochastic starting to hinge lower, right at a level of resistance on RSI here. Look at that. I'm sorry, on the price action here, right at that level of resistance, right at back to the top of that channel. So more likely we're going to see this start to trend lower. We've got the big boys report next week. I think Apple reports next week. It's one of them. I think maybe even Amazon. It's a possible chance that they could start to see some weakness in those big boys. So pay attention to these tech stocks next week. I think they are more vulnerable than anything at this point. And last but not least, looking at our Russell 2, big reversal. Looking at the price action. Look at that hinge on the full stochastics oscillator, and the Williams percentage and RSI all starting to hinge lower. Price action just above the 50-day moving average. Looks like we're ready to hinge to pull to trend lower, head back down towards the bottom of this trend line here. And if we break that, we head back down to the trending channel line, lower trend channel line. So that's what we got the forwards look to on next week. If we take a look at the VIX futures, because VIX futures is what I always pay attention to as to what the market looks like it is ready to do. VIX futures gives us sometimes gives you better insight than cash market VIX. But here's VIX futures. One thing I'll point out is that we have been hovering in a particular zone on the VIX. Just we dropped back below the 50-day, but then we've been trading in this zone right below the 50-day. Trading in this zone, holding this support level around 24 bucks. Not dropping too much further, about 24 bucks. We get right off that, hit that 24 buck level, drop a little bit and come right back. So this is a range right now that the VIX futures have been traveling in. We get a break above the 50-day moving average in a big way, we can start to see this really take off to the upside. So that's something I'll be really paying attention to next week, especially with, if you looking at the VIX, how long that some of these oscillators have been spending time down in the oversold territory. So you have the full stochastic that's been oversold territory for quite a bit. Williams percentage has been hovering around these oversold levels for quite a bit, and looks like it's ready to really ramp up and go back higher. So all signals are really pointing to a higher VIX and lower price action in our NASDAQ, S&P, and the Dow Jones and Russell. So want to make that, that's all I have for you guys. I want to make that real quick, real short, just to let you guys know where the cycle is right now. And we are still in the bear market, even with all the rally we've seen on the past, a couple of weeks, we're still in the bear market. Until we start to see overall stocks start to, have a continuation to the upside for several weeks, several months in a row. This bear market still is in force. So unless we see a major change in the VIX, major change in price action in markets, and major change in what's happening in our economic data. The economic data is not changing. If we don't see, Fed start to back off rates, we don't see inflation start to really ramp down in a magnificent way. If we don't start to see supply chain issues really be resolved completely, this war in Ukraine get resolved. As long as we still got these headwinds, we're going to continue to see weakness in this market. So, all right, folks, that's it. That's all I have for you guys for this weekend. Again, prepare yourself for a lot of earnings that are going to be coming out next week, which is probably going to weigh on the markets in a big way, even in one way or the other. And we got the Fed meeting next week, so probably going to see a lot of volatility next week. Markets the volatility probably really ramp up on next week. All right, folks, that's all I have for you guys right now. Until next videos, Tim Davis signing off. Enjoy the rest of your weekend, and I'll touch base with you guys next week.